Hey, Courtney Smith here, and I want to continue with our series on what's going to happen next. Today, we're going to focus on the fiscal cliff. You're probably asking yourself, what is the fiscal cliff? Well, this is the hardest thing to understand. After all, how hard is it to get into the minds of politicians? I mean, after I do that, I need to take a shower every time I try it. Right now, fiscal policy is teetering on a cliff. The House has passed a $3.5 trillion budget on top of a $1 trillion infrastructure plan. The Democrats need just a majority to pass it in the Senate. Now, that's actually going to be hard to do, so a little bit hard for me to predict it. But here's the shocker. The stock market likes increasing deficits. When the federal government spends more money and creates a bigger deficit, the stock market tends to go up. And when they tighten fiscal policy and we have a smaller deficit or even a surplus, stock market doesn't like it. So the passing of these massive stimulus packages would be bullish for the stock market. And this is why the Senate's actions of if they're going to pass this is going to be critical. One of my principles of trading is that changes in pressure is more important than the pressure. For example, the world would adjust if inflation was 10% per year, and that level of inflation will no longer be important. Everybody will adjust to 10%. But if inflation went from 10% to 11%, that would be a shock to the market. So changes in pressure are more important than the actual pressure because people will adjust. Last year, the federal government spent $6.5 trillion, which was a massive easing of fiscal policy. But now, as I write, before the vote coming up, we're running a surplus. What? The federal government running a surplus? Yes. In the last quarter, because of taxes are so high, we actually ran a surplus. In other words, the current change in pressure is bearish for the stock market because surpluses are bearish for stocks. And that's one reason why the stock market has been so sluggish. The easing of monetary policy should have caused it to go higher, but the tightening of monetary policy, which we already talked about, and now the tightening of fiscal policy is dampening the stock market. So right now we're teetering on the edge of a fiscal cliff. The fiscal situation would turn even more bearish if Congress doesn't pass the budget in September. But the situation could get even worse. The federal debt ceiling is going to cap further spending anyway, and it expires at the end of September. So technically, they have to pass the federal budget ceiling first before they can pass the budget, because the budget would bust the current debt ceiling. So the whole situation will reach a fever pitch here over the next 3 weeks. My best guess, because we're dealing with politicians, so it is just a guess, is that it's very close to call. You know, I'm a guy who's often wrong but never in doubt. I'm in doubt right now. I'm in doubt. I don't know if they can pass it or not. My best guess, 51-49, that it fails. They'll pass the debt ceiling increase, but the fight for the debt ceiling increase will encourage the Republicans to go push farther. In other words, they'll say something, we'll pass the debt ceiling increase, but you can't spend $3.5 trillion. You got to reduce that down to 3.499. No, I mean, I'm joking, but you know what I'm saying. So I'll let you know when it becomes clear to me. But right now, fiscal policy is a big negative for the market. Now, I'm not really looking for a bear market here. We could have a good downdraft in the month of September, which is seasonally the worst month of the year for the stock market. So I put together a course on how to make money in a bear market. Just look down in the description below and check it out. And of course, what I'd like to know is, what do you think the chances are of a bear market this year and next year? Put it down in the comments below. Let's get a little discussion going here. All right, everybody. Talk to you later.